Hi there. In this video, I would like to show you a new position that I opened for Netflix. But before I show you the exact option spread, let me just clarify what I see on the chart. As you can see on the Netflix daily chart, it has been going down since months. It's around the 100 put support, or it's a little bit above the 100 put support. It's around the 0.8 Merrimack pivot line. And there is also kind of a technical support around this area. If we zoom out a little bit, what you can see is that this area might be a support for Netflix. And looking at the implied volatility, there is a rise in implied volatility, obviously, because the market is falling. So the IVR is not high. It's typically in a lower 20s. The IVX is also not pretty high, but the implied volatility itself is rising. So it might be a good environment to create Jade Lizards. And as you can see, the call skew, the pricing skew, is positive, which means the calls are more expensive than the puts. And implied volatility has been rising since the last 5 days. So this is the current market context. And the Jade Lizard is an omni-bullish strategy. And one thing we also need to check is the GEX matrix on the Tanuki web app. And here is the GEX matrix for Netflix. And what I see here is the net GEX column is absolutely negative. It's completely negative for all the expiration. You can see the expirations here. These are absolutely negative. The call skew are present for almost all the expirations. And delta GEX, which measures the GEX change from the previous day, is positive. So for me, that tells that it might happen that the market will turn around for Netflix. So that's why I'm looking for a Jade Lizard position, which is an omni-bullish strategy in and of itself, and is right now positive delta, which means that if the market is going down, it will make a loss. And also you need to understand that this is a naked put position in here. So this is a naked position in terms of risk management. This is a short put here, and this is a short call and a long call. So this part is a credit spread, and this one is a short put. That's why it's a credit strategy and with positive theta, which means that time is working on my side, and I got 1.20 credit for each and every contract. And my main idea here is that I am expecting the Netflix price hover around maybe this area or go up. So the way I build these kind of positions is that I look for the upper side being above 0 all the time, because whenever Netflix decides to jump, I don't want to make a loss. So I don't like to do Jade Lizards that look like this. I don't like this area. I don't want to see negative side of a Jade Lizard. I want to see positive side on the upside. So that's the reason I'm building these kind of spreads. And the delta is still positive, which means that if the market is going down, I'm making a loss. That's obvious. But as we know from options theory, delta will change over time by the effect of charm, which means that as time passes, this delta number will become less and less and less, and later on it will turn to negative. So like after a week or so, maybe this T+0 line will look like something like this. But we will see. One thing that you still need to know, that if implied volatility is going to rise, this whole T+0 line will flatten down, will be even deeper down here, because implied volatility is against the position. Hence, you see this negative Vega number. And what I'm also going to show you is the fill from my trader account. This is the fill. It was filled for 1.20 credit like half an hour ago. This is how I'm playing this kind of omni-bullish strategy for Netflix. And what I also was looking for is the least amount of time I need to be in the position. That's why I found the 19th of December, which is a little bit more than 2 weeks from now. So let's continue from here in the next coming days and see how this position progresses. I'm back again. It's the 5th of December and I want to give you a short update on this Netflix Jade Lizard position. As you can see from yesterday, there was a huge gap down on Netflix and it's trying to bounce back from that gap down. It even bounced back to this HVL line, then falling again since then. The price is around the highest put support, which is at the 100 strike. On the 1.8 pivot in terms of Murray mat, and right now what we are seeing here from the technical side is this support area. So this is a very important area for this price to stay above. If it goes below 100 and stays below 100, it can spiral further down. So let's see how the position is doing in this environment. Obviously, implied volatility has been rising since yesterday. That's why the position is a little bit underwater. But if you look at how much the price has moved against me, this is not a big loss. It's like $5, $9, $10 or something like that. The market is moving around. So it's around $10 plus or minus 5 in terms of the loss right now, what I see. It's still positive data and even got more positive since yesterday because it's going against me. But there's a break even around 93, which is this area. 93 is above the 1 standard deviation 16 data probability cone. So it's that break even line or break even point of the strategy. You have to know that the 16 data probability curve will always change as the market moves. Right now what I can see that my current break even is pretty safe, quote unquote safe, because it's never safe to be in a Jade Lizard because there is a naked put component to it. But right now I'm not doing anything with this position because I still have time, and I think that this is a level where the market might bounce back. So let's see what the next week will bring us. I will continue from here. I'm back again. It's the 8th of December and it's Monday. And as you can see, the position has turned against me. It's a very bad position already because what I was missing is that Netflix has won the acquisition of Warner Brothers, and as it always happens, the buyer who is buying a new company gets sold in the market, and this is what happened on Friday. But there was a small bounce back, and today there is another red candle and the market is below the 100 put support, which is not good, because if we are below the put support and in negative GEX territory, the market can sell further down. And as you can see from the delta curve, last time I showed you that the 19th of December was around 92, the curve, where the curve crosses the expiration line. It was around 92, 93. Now it went below 90 because implied volatility has been rising, and that's why the curve is getting wider. So in a situation like this, what I need to do is increase my probability of the trade to be at least break even or in a small loss. And that's why what I was looking for with this Jade Lizard position, as you can tell, this is not very good because the put support or short put is very close. And right now it has a huge positive delta, so that it needs the market to go up. And there is a $150 unrealized loss. So what I did, there are different things you can do, but what I did is roll down the 104, 105. So I rolled these strikes to 96 and 98. I made a 2 difference spread because I wanted to have higher credit. So that's why I changed the position like this, because this moves the lower break even a little bit even lower. It's not a big deal because it does not move the lower break even too far, but it gives me time and breathing for the position. And the way I wanted to make it is that if the market shoots up, I don't lose any money. And as you can see, this part of the risk curve is above 0. So at expiration, if Netflix is above this area, I can make $16, but probably I will close it then before that. So that's how I adjusted the position. And here is the screenshot from Tradier. The other thing someone can do with a problematic Jade Lizard is that, for example, buying back the 95, which is probably a little bit expensive because of implied volatility increase, and selling another one, for example, 92. You get to pay around $90 as a debit. And if the market shoots up, this is another problematic situation, but this moves the lower break even further because you close the 95 and you open the 92. I was not looking for that because I think market might stall around here, or at least gives a little breathing room. I don't know yet, but I have to watch the position because this is not good. Absolutely not good. Delta is increasing and it's getting even uglier and uglier every minute. So I need to closely watch this position. I will continue from here. I'm back again. It's the 9th of December, and yesterday I adjusted the Jade Lizard position. But before I show you the position and how it looks like, let's look around the GEX profile and how it changed from yesterday. If you look at my video from yesterday, there are some notices, there are some changes that you can make. For example, call pricing skew has increased since the last recording. Implied volatility has decreased, so this is going down a little bit, this is going up. And the other thing that might be important to notice is that yesterday the 100 level was the highest put support. Right now it's 95. 105 as the core resistance remains. So for me it tells that the market is bouncing back from these levels, and that's why 95 became the dominant put support. And what we can also see on the daily candles that the market is a little bit bouncing back. And since calls are more expensive than puts and this increased, IV decreased and the put support went down, for me it tells that the market might make a turn here. So now let's look at the Jade Lizard position. And if you remember, yesterday this position was around $150 in a unrealized loss. Right now it's only 76 because implied volatility was falling, the market stabilized, there is, positive time in the position, so positive theta makes money, and the market went a little bit above from the previous levels. That's why the unrealized loss is like half of the value from yesterday. So this is how fast a Jade Lizard can change in one single day. So right now what you can see, if the market holds around this 95 put support level, then this is a quote-unquote safe position. It's never safe because there is a naked short position embedded in the whole thing. But that's why it's important to keep an eye on the put support and how IV changes, how the other metrics are changing that I'm showing it to you. The one thing that did not change is the 105 core resistance. It remained the same. So there is no bullish pressure right now, what I can see from this picture. There is no bullish pressure. But as long as the put support stays here, there might be a small neutral or sideways movement or a little bounce back. Both of them are good for the position because it's theta positive and has a pretty high area for making money. So let's see in the next coming days how this position evolves. I will continue from here. Alright, I'm back again. It's the 12th of December and the last recording was on Tuesday in this small red candle, and after that on Wednesday there was a huge down move in the Netflix price, and the last 2 days was a little upside momentum since it was flattening or bottoming around here. And what we can see from the GEX chart or GEX profile is that there are some changes. For example, the 105, which was the last time highest core resistance, went up to 120. The put support was 95. Right now it gone back to 100, which means a lot of people were hedging around the 100 area. Core pricing skew increased since my last recording, and also implied volatility. And the other thing that we have to see, that last time when I recorded, the market was around this level or a little bit above, because this was the candle that I recorded last time. Right now it's a little bit below, and let's see how the position is doing. Right now what you can see is right in the middle of the tent, And last time there was around $75, $80 unrealized loss in the position. And since then, Theta made its very good effects on the position, because time is working on our side if we are doing Jade Lizards or Strangles or Straddles in a good way. So right now it's very close to being break even. When the market went down to 93, the price was around this area, so it went almost out of the tent, but I was really curious about if this level holds or not, because this was also a huge technical level, and there was another put support there. So it had, and then I waited. I did not adjust the position, but here you can see some kind of adjustment ideas, what someone can do if you have a position like that and you don't like it. Right now it has around 50 data and very positive data. Next week is the expiration week, so this will earn data even faster than before because it's approaching expiration. And what someone can do, there are different ideas. For example, this one. You can always buy back the problematic short put, the 95, and roll it down, but you have to pay for that. That's one thing. And if the market shoots back up, that's not good for you. You can, for example, do a back ratio where you sell another short leg down here. Obviously, it will create more risk on the downside if it's continuing to go down. Or you can, for example, roll down the short calls, like with a condor order. So if I did this adjustment here, that would mean that I roll down to 96 to 94, and then it would create as a lower break-even. See the break-even? Right now, this is the break-even around 93-ish. And if I make it this, it goes down another like 50 cents. It's not a big deal. You don't get a lot of credit, but it's a small adjustment on the downside. I don't want to adjust the position right now because there is a nice bounce back and time is working on my side. So I'm okay with this positive data. This positive data will decrease because of charm. The charm tells you how much data will change over time if time passes. And right now this data will be lower and lower and lower if the market stays here and we are approaching expiration. I hope I can show it to you in the next couple days. Right now the position has 7 days until expiration. So I'm not adjusting it. I just wanted to show you how it has changed since my last recording. So I will continue from here. I'm back again. It's the 15th of December. We are on a Monday, and on my last recording we saw that the Netflix price was a little bit bouncing from the bottom. Right now what it looks like is that it's trying to go to another low or a double low or a double bottom. Right now what you can see is the 95 is the highest put support for this week's expiration. And in my last recording it was around 100. So the put support gravitated lower, which means that the hedging activity became lower. So probably market participants are thinking that the market will be lower. So that's why I had to adjust the position. But before I show you what I adjusted, there are other numbers that also changed. The IVR became higher. The IVX became higher since the last recording. The call pricing skew as well. So there are also call buyers. So we have to note that. And the implied volatility is rising, like IVX is telling you. And this number also tells you what happened with the implied volatility in the last 5 days. It was already rising. So let's look at the position and how it looks right now. Right now, it does not look very well. We have a huge delta, which is positive, obviously, because it needs the market to go up to make money. And that's why I had to do a couple of adjustments. One adjustment is rolling the whole credit spread down. So this was a 96.98 core credit spread. I rolled it down. I bought it back for 59. This was the buyback order. And then I sold another one even lower, 94 and 96. The only problem with 94 is that it's already in the money because you see the current price is 94.32. So I have to watch this not to be assigned before expiration because very in the money calls tend to assign before expiration. So this is what I have to look at. And the other thing I did is I rolled one of the 95 puts to 93, paying $1 debit. So right now what I did is this one is the last one I did. So right now I tried to lower the delta. As you can tell here, my cumulative net delta lowered by like 30 figures. And that's why it's a little bit more flat than before. And if you compare the two states, before adjustments, I had this break even here around 93-ish. And after adjustment, it went down to 92. So I made like 1 point space in terms of lower break even. And the other thing you should note is that this maximum profit also decreased substantially because of this adjustment. I had to pay money for rolling the put down. So that's why the maximum profit of a tenth became lower, and the whole tenth also became a little bit more narrow. So if Netflix decides to jump back up, I might make a loss in here because the whole thing went below zero. But that's just a cost of doing adjustments, and you always need to balance between risk, probability, and handle the position accordingly. So right now this is the current position with a lower delta than before and with a lower break even than before. And obviously data is working on my side, and we only have 4 days until expiration. But the whole market does not look good. SPX is falling a little bit. There are lots of tech stocks that are falling. For example, Apple is falling, but Apple was very, very strong in the previous days and weeks. So I'm expecting maybe there will be a testing of the double bottom, and also looking at the 95 put support. If it's broken, it can spiral a further down move in the price of Netflix, and also looking for these numbers, how they change during the week. So right now the position is showing around $100 unrealized loss. And if the market stays here, that's fine. Then the whole thing can go above zero in like 2 days. And if implied volatility also is decreasing, that also helps the position, because this is not only a positive theta position, but it's also a negative vega position. So it means that if the implied volatility is rising, negative vega hurts the position. So let's see what this position is evolving into the next couple of days. I will continue from here. I'm back again. It's Tuesday, and as you can see from the price chart, yesterday was a nice big red candle down, and right now the market is bouncing back from these levels. Right now the put support changed to 94.5. Yesterday it was around 95, and the core resistance did not change. The only thing that changed since yesterday is the IVR and IVX has been falling since yesterday, and also IV is depicted here that it's lower than before. And let's look around the position and see how it has changed. This is the current position that I adjusted yesterday, and I want to show you something very interesting. If I had not made any adjustments yesterday, rolling the put down and paying $1 debit and also rolling these down, it would be in a profitable state after 1 day. 1 day of theta and 1 day of implied volatility falling helped the position tremendously, because yesterday it was more than $100 unrealized loss. Right now it would be in $40 profit, but since I paid $1 for rolling down the 95 to 93 and also roll these down, the position is around break even right now. So the current position after adjustments is around break even, and if the market continues to climb back up from these levels, maybe testing the core resistance, then the whole position will change to a profitable state, probably by tomorrow or after tomorrow. The position is still positive delta, but not as positive as before because of time decay, and and also has positive theta, and as before negative vega, which did not change. So volatility increase is still not good for the position. So this is the current state of the position, and as you can tell from the risk curve, This is the 93 put, this is the 94 short call, and this is the 95 short put, and this is the long call 96. So right now this is in the money and this is also in the money. These are already out of the money strikes. So approaching expiration, I need to take care of these two strikes. I don't want to be assigned on Netflix right now. I want to keep the position as it is until tomorrow for sure, because data will do its thing if the market bounces further back and going up from this double bottom. Yeah, and that's it. So let's continue from here tomorrow. I'm back again, it's Wednesday, and let's look around what the Netflix has been doing since yesterday. And as you can tell from the daily chart, there is a double bottom, and the put support has held firmly nicely since so far, because the market just kept up this morning, and there is a 97 call resistance right now. So the whole GEX profile is a little bit squeezed, or it's a little tight range, so there might be a breakout from this level. Let's compare the metrics from yesterday. This value decreased a little bit, this has increased, and the IV in the last 5 days has decreased 3.81%. The core pricing skew also decreased from yesterday, and right now there is a bounce from a double bottom. Let's look at the current state of the position. As you can see from this current risk graph, it shows you a profit right now. Since yesterday it was around break even, and as I previously mentioned, the delta became negative, which is the effect of charm that moves delta with time. So right now the position looks like this, and I wanted to show you a couple of adjustment ideas that someone can do in a position like this. I haven't yet adjusted the position, I'm just looking at it and watching it. But there are different things someone can do. Someone can buy back, for example, 1/2 of the vertical spread, and for example, buy back the 93. That's by creating a profitable zone above 0 if Netflix continues to go higher. But then the delta becomes positive again. It depends on the trader if he wants it or not. Or someone can just close the whole position by buying back the 2 call spreads and buying back the 95 put and 93 puts. And that's why if I did this, there would be around $23 profit in the position. And the other thing that is interesting, if I had not done the adjustment on Monday, this would be a really nice profitable position at this stage, because it would be in under the tent with positive data and a little bit positive data, but it's very, very nice. Because of the adjustment that I had to do on this day, and sometimes this is the cost of risk management, the whole position looks worse than before, because I had to do this adjustment. I had to roll down with a debit, and I had to roll these credit spreads as well. But since the most important thing in trading is risk management, sometimes you have to do it and increase your probabilities. So that was the cost of it at this moment. And if Netflix continues to go higher, this will be going down here and eventually make a loss at expiration, because we are under 0. So we are on a Wednesday, and I have to decide on adjusting the position further or just close it down. One thing I am thinking about is buying back 1/2 of the credit spread and buying back the 93 put, and then adjust the position this way. And if the market keeps continuing, for example, lower, this data would become negative again for tomorrow, and I can even make a higher profit than what is currently looking in the position right now. There are other adjustments that someone might do in this position, like for example, buying back both of the verticals and then keeping this position. Right now, this is a very huge positive delta position, but there will be no more loss in the core credit spread, because these credit spreads are already in the money. So this is a losing core credit spread, right? That's losing. That's the upside of the whole thing. And if somebody wants to buy back both of them right now, the position will be in a much better state in terms of the final maximum profit 78, but there will be huge positive delta. So that's another option someone might do in a position like that. Right now what I'm watching is the 97 core resistance GEX level, because if it's broken, then there might be a core gamma squeeze on the upside. So that's the thing I'm watching, and that's why I'm not really reacting or adjusting the position yet. I want to see if it's breaking on the upside, or the 97 core resistance will act as a resistance and fight back the price. We will see in a couple of hours. I'm back again. It's still Wednesday, and if we look at the chart in a 15-minute time frame, what we can see here that there was a clear rejection of the 97 core resistance. In my previous recording, I said the 97 can act as a resistance or can act as a rejection point. And this is exactly what happened. 97 was rejected a couple of times. This was one rejection, first, second, third, and the fourth rejection. And right now the price is around here. If we look at the option graph or risk curve, we see that the position is in a better state than before because there is a higher unrealized P&L, and since tomorrow there will be CPI coming out, that's why I decided to close the position down, because I don't want to risk this position anymore, because if there is a huge negative surprise in CPI, this can gap down easily, and I don't want to be in that position. So that's why I closed the whole thing down. I had to buy back the call verticals for $1, the 95 put for 102, and the 93 put for 35 cents. Here are the screenshots of the fills. Here you can see the individual legs, this one, and here you can see the vertical spread. So if I click on all of these positions here, you will see that the position is absolutely netted out, and the realized profit was $41 in total. So let's see what would have happened if I did not do the adjustment on Monday. How would the position look like? Here is what it would look like. It would be around $120. But since risk management is the first priority, I had to adjust the position, because remember, we were going down and it did not really look nice. So that's why I had to do it. And today I finally closed this position in a profitable state, and this is how it looks with $41. The other thing I wanted to show you is that how the position would look like if I had done nothing during the whole lifetime of the trade. Remember, this was the original position, and it would be still in a profit without doing anything. Sometimes it happens that if you don't adjust, you end up with the same thing, but this is what you don't know in advance. Risk management is the first priority, so you have to adjust. If we did the second adjustment, that would be probably the best, because if I left it like here, that would be the highest profit. But again, risk management is first priority, so that's why I had to adjust the position accordingly. So all in all, this was a $41 profit at the end. I hope you gained some insights about GEX profile reading and how to adjust and manage a Jade Lizard when it's going against you. If you have any questions, just let me know. Thank you for your attention. Take care. Bye. Thanks for watching. If you haven't yet, please subscribe and check out our other videos. You can always find us at the links in the description. Trade safe out there.